Hello, and welcome to this presentation on controlling the construction project, presented by Tech Training, LLC. In this presentation, we are going to review the processes required to control a construction project. Construction management begins with the construction management cycle, which is the identification of the owner's objectives. The owner, the designer, the estimator, and the constructor will design, estimate, and schedule the construction project based on the objectives of the owner. The larger and more complex the project, the more coordination is required to manage the project and ensure the owner's objectives are met. Project control is the process, and its purpose is to guarantee the design, budget, and schedule are all met to the satisfaction of the owner. This is the overall responsibility of the project team. Simplified, the purpose of construction control is to successfully deliver a construction project. Projects with more complexity have to be constantly monitored to guarantee success. But small projects also have to be controlled. Projects require good coordination between all project teams, large or small. Let's use an example. Imagine your friend, Charlie, is going to run the Boston Marathon, and if he can maintain a pace of 12 miles per hour, he can finish the race in 2 hours, 11 minutes, giving Charlie a reasonable chance of winning the race. Charlie is obviously an excellent runner, but his biggest weakness is he cannot maintain a pace over 13 miles per hour for any distance greater than 5 miles. To make sure Charlie stays on pace of 12 miles per hour, you set up a checkpoint in Natick at the 8-mile mark and in Newton at the 20-mile mark. As Charlie cruises through Natick, you check the time and it's 40 minutes. Charlie is running a perfect 12-mile-per-hour pace. The team is excited. For Charlie to maintain the 12-mile-per-hour pace, he should pass through Newton at 1 hour 40 minutes. As you wait, 1 hour and 40 minutes comes and goes, as does 1 hour 41 minutes and 1 hour 42 minutes. And no Charlie. Finally, at 1 hour 42 minutes and 36 seconds, Charlie passes the Newton checkpoint. Now, Charlie only has 23 minutes and 24 seconds to reach the finish line at 2 hours and 11 minutes. You do a quick calculation. Charlie needs to run a pace of 14.6 miles per hour for the final 6.2 miles. Remember Charlie's weakness. He can't run over 13 miles per hour for any distance over 5 miles. Charlie is not going to win the Boston Marathon. What went wrong? Well, the biggest downfall was Charlie only ran 11 miles per hour for the 12-mile stretch from Natick to Newton. Therefore, telling Charlie to pick up the pace in Newton did no good whatsoever. It was already too late. But had we set up a checkpoint at the 14-mile mark, we could have identified earlier that Charlie was slowing down, and we could have encouraged him to go a little faster in order to stay on the planned 12-mile-per-hour pace, without getting into a pace we know Charlie can't maintain. And then Charlie could have won the Boston Marathon. Construction projects also need checkpoints. The project team will set up checkpoints or controls to continuously monitor the progress of the project. The control will be verified against the budget and schedule. The budget and the schedule are what the project team agrees are acceptable standards. Just like Charlie, the team will constantly check to make sure the goals are being met, but they won't miss the 14-mile checkpoint. These controls will give us a good idea as to when the project will be complete and the overall cost of the project. By continuously checking, we can establish our project control cycle. The key to successful project controls and ultimately successful projects is the variance between the actual budgeted hours and schedule and the control. Think of it this way. The 1 hour and 40 minutes at the Newton checkpoint was the control, and Charlie's time of 1 hour and 42 minutes and 36 seconds was the actual. Here, the variance is 2 minutes and 36 seconds. And again, by the time we discovered it, it was too late to correct. As an example, if we take a look at this chart, it shows us 350 cubic yards of material was supposed to be excavated in 3 days, 24 hours total. But it took 4 days, or 32 hours. The actual equipment and labor hours to complete the job exceeded the project budget. The difference between the actual hours and the budgeted hours is an 8-hour variance. Now, what are some of the things that could have gone wrong? Change in site conditions, bad weather, inexperienced operator. The key to project control reporting is that the inconsistency in actual hours and budgeted hours is identified and corrected quickly. Realistically, a small, 3-day excavation project of this nature would have a checkpoint at the end of each day. This is the project control cycle. It consists of 6 individual processes. The first step is the project plan. This initiates field operations. A project's budget, schedule, and general building strategy must be continually reviewed and revised as necessary. The project plan should state the sequential order of work, the type and level of staffing, and the equipment needed. Next is field operations. If field operations go smoothly, we'll have minimal issues. However, they rarely go smoothly. Therefore, we have to be aware of external factors such as bad weather, equipment breakdown, permitting issues, material shortages, or any other issue that make field operations difficult. From the field operations, we will get actual field data, including cost and schedule. This is where we will receive actual cost and performance data from the field. This allows us to compare actual data to our initial plan. Here, actual costs and schedule performance is compared to the plan and the variances are established. We can now analyze this data. If we find our variances are due to external factors, our best course of action may very well be to stay the course. But if we discover a slowdown due to lack of materials, equipment delivery, or even worse, incompetence, we need to take steps to correct it. This leads us to the final step, project management. This is where the final decision point is made in the control process plan. The whole purpose of this is to deliver to the construction manager accurate and timely project status information, so intelligent decisions can be made. Now, adjustments to the plan are made, the work plan is adjusted, and we begin again. Just as if we caught Charlie at the 14-mile mark, we could adjust the plan and then take another look at our controls at the 20-mile mark. Each project participant has a certain amount of responsibility to keep this project on schedule and budget. The owner wants a quality project delivered on time and on budget. Therefore, they can provide up-to-date information through requisition requests. In other words, only pay for work which has been completed. Each time a requisition is submitted, provide up-to-date information on the progress of the project. The designer, in the traditional design bid build format, must prepare accurate contract documents for the bidding process. If the designer stays on as a consultant, they should be reviewing the quality of work and evaluating the progress payments. If the delivery method is design build, the design work packages become a key part of every step of the construction process. Therefore, the overall master schedule for the project should be linked directly to the timely submittals by the designer. As for the construction manager, they should be overseeing each contractor's work, quality, and performance. Since the CM is a key player in any delivery method they are involved with, they will also be responsible for the master schedule and project budget, meaning any variances should be reported and dealt with immediately. And there's the contractor themselves. If this is a design, bid, build, delivery, the contractor has similar responsibilities to the CM in other delivery methods. If they are a subcontractor working in another delivery method, they are responsible for the documentation of all actual project costs, progress, and productivity. Now, in generating this data, cost engineering is required. Cost engineering should not be confused with accounting. Accounting is historical costs, taxes, invoicing, and so on. Cost engineering is forecasting and trending, and using project information to measure how well a project is doing and forecasting the project's potential outcomes. Accounting and cost engineering do work together. Typically, a system is created that both disciplines can work with. A common system is cost coding. Cost coding can be very generalized or very detailed. In most cases, spreadsheets are developed that describe the specific project. Also, project numbers are created, areas of the project identified, tasks within the area, and assigned costs for specific tasks. Assigned costs will include labor, materials, and so on. This is an example of a cost coding system. In this example, the product number might be broken down as the first two digits being the year the project was won. The A might indicate a negotiated bid, while the N suggests new construction. 06 could be the month of the year the project began. The area may be building numbers, floor of the project, assigned locations, and so on. Operation numbers are usually associated to the CSI or Construction Specification Institute format. In this case, the 03 indicates concrete, while 070520 indicates when it was purchased. Using this method, contractors can begin to document historical costs. Note, product number 19AR11 is also concrete, and since its purchase in December of 2019, the price increased $5 per yard. Finally, the distribution number may be associated to a specific vendor, equipment supplier, material, and so on. This keeps office and field personnel in harmony for budgeting and payment purposes. If everyone does their job, we can create a cost and schedule performance. How often do we evaluate, and the amount of detail will depend upon the project. So now, let's take a look at the basics. Earned value is calculated by the percentage completion of the project multiplied by the budget for the project. As an example, let's assume we have a roofing project that has been budgeted for $10,000 and 80 hours of work. The actual roofing project is 40% complete. Therefore, our budgeted activity is the $10,000 multiplied by the 40%, or $4,000. And our budgeted hours is the 80 hours which has been scheduled multiplied by the 40%, or 32 hours. So, here's the problem. Of the 80 hours that have been budgeted, 2 roofers have been on the job 3 days, or a total of 48 hours combined. Our actual cost, the amount we have been billed, is $5,100. Therefore, we have a cost variance of $1,100 and a performance variance of 16 hours. In other words, we are out $1,100 and 16 hours of work have not been completed. Now, this is just a single task example. Let us take a look at how we can apply this to the entire project. If we were to simply combine all the activities' earned hours, we would be able to determine the project completion percentage. Also, if we combine all activities earned dollars, we would be able to determine the project budget percentage. Using our roofing example, our earned hours are 32. Again, this is the 40% work that has been completed, and our actual hours are 48, the amount of hours the roofers worked. These are the actual hours. This means we have a performance index of 0.66. Whenever a performance index is below 1, it indicates an improvement is needed. In this case, the roofers are behind schedule. As for dollars, we have $4,000 of earned work, but the actual cost is $5,100. This indicates a cost index of 0.784. In other words, this project is over budget and behind schedule. So now, let's apply this to multiple tasks on a project. The system just presented is called the earned value approach. It is a widely accepted system for calculating progress on complex projects. This system of determining project progress addresses both schedule status and cost status. This system tells us if we are ahead of schedule, behind schedule, or on schedule, under budget, over budget, or on budget. As you saw, earned value is based on developing percentages of the budgeted costs associated with individual tasks or line items. Each work package has an initial budget or estimate which is defined as the budgeted cost at completion, or BCAC. As work proceeds on individual tasks, assessment of the percentage complete is made at the various checkpoints or dates. The initial schedule establishes an expected amount of work completion as of that checkpoint. This cost production curve is referred to as the baseline. At any given time or checkpoint, the units of cost or production indicated by the baseline are called the budgeted cost of work scheduled, or BCWS. Now, the field operations and reporting will provide information regarding the actual cost of work performed, or ACWP, and the earned value is the budgeted cost of work performed, or BCWP. The relative values for a given work package or task at a given point provide information about the status in terms of cost and schedule variance. The parameters which form the foundation of the earned value concept are as follows. BCWS, the budgeted cost of work scheduled. This is a value of the baseline at a given point. ACWP, the actual cost of work performed. This is a measurement from the field. BCWP, budgeted cost of work performed. This is the percentage complete multiplied by the budgeted cost at the completion, or BCAC. And remember, the BCAC is the contracted cost for the work package. These acronyms, values, and measurements are the same concepts as previously discussed. However, to put them into context, let's consider another small project. Here is our activity table. As you can see, each category is listed across the top and the various activities are listed down the left-hand side of the table. These activities could be any work package for a specific construction project. Now, we will begin filling in the table and explain each category as we proceed. The first step is to fill in the BCAC, or budgeted cost at completion. Once again, the BCAC is the contracted amount for the work package. The first activity is $7,500. The second activity is $10,000. The third activity is $25,000. The fourth activity is $20,000. And the fifth and final activity is $15,000. The total cost for the entire project is established at $77,500. So now we will analyze the first activity. The BCWS, or budgeted cost of work scheduled, is the first checkpoint. So When $4,500 worth of work should be complete, an evaluation will be done. The BCWP, budgeted cost of work performed, will give an indication as to how Team 1 is doing. And it looks like they're behind. The BCWP of $3,000 indicates a 40% completion rate for this task. According to our checkpoint, we were hoping for a 60% completion rate at this point. Let's move on and take a look at the actual cost of work performed, ACWP. The ACWP is $2,250. Again, the actual cost of the work performed is the actual cost of the work. Generally, the employee hours need to be converted into dollars and the project costs need to be added up. This means that such items as labor, materials, equipment, fixed costs, and so on. Here, let's assume this work has been done and our total ACWP is $2,250. Next is our PC, or percent complete. This is a calculation. It is determined by the BCWP. Here, the $3,000 worth of work performed is 40% of our total budget, or our BCAC of $7,500. Next is our CV, or cost variance. This number is derived from subtracting the actual cost of work performed from the budgeted cost of work performed. The schedule variance, SV, is the budgeted cost of work performed minus the budgeted cost of work scheduled. In this case, $3,000 minus $4,500 is negative $1,500. We can now calculate our CPI, Cost Performance Index, and SPI, Schedule Performance Index. The CPI is the BCWP divided by the ACWP, or in this case, 1.33. The performance index indicates positives or negatives for a particular task. In this case, the CPI of 1.33 suggests we are ahead on budget. However, the 0.67 Schedule Performance Index suggests we are behind on schedule. According to our data, both these indices are correct. In other words, because we are behind schedule, we have not been billed for the work that has not been completed. Now, the SPI is calculated by the BCWP divided by the BCWS. And now, we can take a look at our final two items. The ECAC is the estimated cost to completion. Again, this is an estimate of the total cost at this point in time for this particular task. The ETC is the estimate to complete. This is an estimate of how much money is needed to complete this task. The ECAC is calculated by adding the BCAC plus the ACWP minus the BCWP, or in this case, $7,500 plus $2,250 minus $3,000 is $6,750. So according to our data, at this point in time, we should save money on this task. Finally, the ETC is equal to the ECAC minus the ACWP. Now, let's take a look at the remaining tasks. For activity number 2, the checkpoint is 10% of the task, or $1,000 budgeted cost of work scheduled. According to the data, the task is slightly ahead of schedule as the budgeted cost of work performed is $1,200. But this is costing money as the actual cost of work performed is $1,500. The task is 12% complete. The cost variance is negative $300. The schedule variance is plus $200. The CPI indicates the task is slightly over budget, while the SPI shows the task is slightly ahead of schedule. The estimated cost at completion has increased by the $300 additional dollars, and therefore $8,800 is needed to complete the task. again at this specific point. Here is the remainder of the worksheet. Activity number 3 is right on schedule and budget. Activity number 4 is showing problems for both budget and schedule, and activity number 5 has not started. Now this is the first checkpoint for each task. Activity number 1 is probably the biggest concern, as subsequent activities may be dependent upon its completion, and for the sake of argument, let's assume they are. In other words, though activities number 2, number 3, and number 4 have started, none of them can be completed until activity number 1 is finished. Now, activity number 3 is running smoothly, but activity number 4 is having trouble. The team said they had some startup issues and are now ready to roll. Totals at the bottom show $10,200 worth of completed work, and the project is 13% complete. So now, let's take a look at the second checkpoint. This is the table for the second checkpoint. Activity number 1 is being reviewed at $6,000. Activity 2 is being reviewed at $5,000, and so on. Activity number 1 appears to be catching up on the schedule, as the BCWP is $5,900 at this $6,000 checkpoint. The activity is also still under budget, as there is a positive $400 cost variance. Activity number 2 is on schedule and under budget. However, activity number 3 is falling behind, as it is now over budget and behind schedule. And team number 4, true to their word, is now on schedule and on budget. Also, activity number 5 is now underway, on budget and on schedule. And our totals show $38,400 worth of work completed, which is 50% of the overall project. Let's take a look at our next checkpoint. At checkpoint number 3, activity number 1 is complete. Activity number 2 is on budget and on schedule. Activity number 3 is under budget and ahead of schedule. But activity number 4 has fallen behind again. This task is over budget and behind schedule. Though activity number 5 is currently on budget and on schedule, they can quickly fall behind if they are dependent on activity number 4. Team number 4 has again said they had some issues, but are ready to finish up. The totals show $58,500 worth of work has been performed, and the project is 75% complete. Our next checkpoint is our final checkpoint, and the project should be complete. And the project is complete. It has been completed on time and on budget because accurate and reasonable checkpoints were established. And Charlie has won the, okay, it takes a lot more than improved checkpoints to win the Boston Marathon, but Charlie stands a better shot next time around. Just a couple of final comments. The earned value approach may sometimes use quantities produced. When this is the case, you will see such items as AQWP, actual quantity of work performed. This is also measured in the field. You may see BQAC, budgeted quantity at completion. This is a value of the quantity baseline as projected at a given point. These items are typically used when the work is being measured by quantities. As an example, the measurement may be how many cubic yards of concrete have been placed, but the concept remains the same. In even more complex projects, a combination of quantities, dollar amounts, and time frames are used. You may also see TCPI, or To Complete Performance Index. This is the required CPI necessary to finish the project right on budget. For example, if the TCPI is 1.10, it means you have to find 10% efficiency to finish on budget. And this is going to conclude Controlling the Construction Project, presented by Tech Training, LLC. Thank you.